Wall Street's slide stretched into a third straight day, but this time the biggest stocks were the ones holding the line, while the average stock did the falling. Welcome to Finance in Review and the U.S. market recap for Monday, July 20th, 2026. Nothing in this video is investment advice. Later, why an electric aircraft maker rocketed nearly 20% after unveiling an autonomous military rotorcraft. The S&P 500 slipped for a third consecutive session, closing at 7,443, down about 0.2%. It was a quiet number that hid a split beneath the surface. A handful of large mega-cap names actually rose and cushioned the drop. Strip them out, and the average stock fell harder, with the equal weight version of the index down closer to 0.5%. The Dow Jones Industrial Average was the weakest of the major benchmarks, falling about 0.6% to 51,839. That marked its third straight decline as well. Across our tracked universe, roughly 2 stocks fell for every one that rose, a reminder that the selling was broad rather than concentrated. The Nasdaq held up best, essentially flat, with a decline of just 0.05%, closing near 25,508. Technology was one of the few corners of the market to finish higher, which kept the tech-heavy index from joining the deeper losses seen elsewhere. The Russell 2000 told the day's real story. The small-cap index fell about 0.7% to 2,942, the steepest drop among the majors. On a day when the largest companies steadied the headline indexes, smaller and mid-sized firms carried the weight of the decline. The VIX, Wall Street's gauge of expected volatility, edged down about 0.6% to 18.65. That keeps it in moderate territory, elevated from the sleepy readings of early summer, but well short of levels that signal real fear. Falling volatility alongside falling stocks is an unusual, if mild, combination. Sector performance leaned decidedly negative, with 8 of the 11 groups finishing lower. Healthcare was the weakest, down about 1.1%, followed by materials, off nearly 1%, and both consumer discretionary and industrials, each down about 0.7%. The declines were broad but shallow, with no single group collapsing. On the other side, only 3 sectors managed gains. Energy led the way, up roughly 0.5% as crude oil held near $82 a barrel. Communication services added about 0.1%, and technology eked out a gain of less than 0.1. The pattern fit the day's larger theme. Economically sensitive corners struggled together, while the mega-cap heavy technology and communication groups quietly outperformed. Beneath it all, the 10-year Treasury yield pushed higher, climbing to about 4.6%, a move that tends to weigh on the priciest, longest-duration growth stocks. Now to the story's other channels skip. The standout gainer was Archer Aviation, an electric aircraft developer, which soared nearly 20%. The company, together with defense firm Anduril, unveiled a jointly developed autonomous vertical takeoff aircraft with the defense variant, named Thunder, pitched as a next-generation attack rotorcraft. It was a genuine product announcement and investors responded in force. The losers told a rougher story. StoneX Group, a capital markets and brokerage firm, tumbled more than 30%, extending a steep multi-week slide. There was no company-disclosed catalyst behind the plunge. Moves like this in a stock already under heavy selling pressure tend to reflect positioning and forced selling rather than any single piece of news. HDFC Bank, one of India's largest lenders, fell more than 10% after reporting quarterly results. The bank posted solid loan growth, but its net interest margin, the spread it earns between lending and funding, narrowed further, and investors focused on that squeeze. Penguin Solutions, an information technology infrastructure company, dropped nearly 12%, sliding ahead of a wave of chip sector earnings. Most actively traded names by volume showed where the crowd was focused. Ondas Holdings, a drone and defense technology company, was the single busiest stock, with more than 185 million shares changing hands as it climbed about 5%, a move driven largely by retail interest rather than fresh company news. UiPath, an automation software maker, traded nearly 170 million shares and finished essentially flat. American Airlines saw about 165 million shares trade, rising roughly 1% ahead of its upcoming quarterly report. And New Holdings, a Latin American digital bank, added close to 3% on heavy volume of more than 150 million shares. Time for today's Market Minute. The most important number in finance is not a stock price. It is the yield on the 10-year United States Treasury note. This is the benchmark the entire financial world prices against. Mortgage rates track it. Corporate borrowing costs are set as a spread above it. Even stock valuations lean on it, because that yield is the risk-free return every other investment has to beat. When the 10-year moves sharply, everything from the housing market to high-growth technology stocks feels the ripple. That is exactly why today mattered. The 10-year yield climbed toward 4.6%, and rising yields tend to press hardest on the stocks whose profits sit furthest in the future. To recap, stocks fell for a third straight session. The Dow slipped about 0.6%, the S&P 500 0.2%, and the small-cap Russell 2000 led the declines. The day's real theme was a narrow market, where the biggest stocks steadied the averages while the average stock struggled. That's the market close for today. Thanks for watching. And remember, this is information, not investment advice.